high, yes or no?
Oh,
this
no.
week or no?
What have you done? Green is missing.
And red. She could have compensated and she's wearing red. Beat that.
I think we are on course to make a new high.
Yeah.
Now, whether we'll make it in the month of May, whether we'll make it in the month of June, I think that is conjecture. But you are on course to make a new high. Frankly, if you ask me in terms of narrative, markets are moving exactly as per the script. The naysayers are now suddenly believers, and the believers are forced to jump in at higher levels. All the FNO data the FNO data what we've analyzed clearly seems to be pointing that not only there is a change of heart, there is a change in terms of the positioning by FIs in the cash market, by FI in the FNO market, and the activity which has started in the retail market. Now, the question is pretty much the same what we put out on the screen, which is that after a 1500 point rally from 16,800 to 18,200, is the risk reward still favorable? Well, if you're a momentum watcher, I still feel that you should not cut your long positions. And why am I insisting that you should not cut your long position? Took a 1500 point rally is a smart rally, and markets may take time to digest it. But typically when markets they top out, there are some data points, and if you map the historical patterns with the current data points, I don't think we've reached what could be called as a overbought zone. See, Avan, Aisha, my sense is that there is a difference in consensus view and consensus pricing. India is the go-to market, that's a consensus view. But even though India is a go-to market, I don't think we've reached a level of consensus pricing. And typically when markets they peak out, the technical indicators have to become extremely overbought. FI positioning has to change. I don't think we are there yet. Will we make a new high in this dash? I don't know.
And FIIs have just come back to the market. It's only been 8 sessions of some, meaningful buying.
Exactly. So they have to rebalance whatever they have sold. Markets, and since we are talking the FI language here, markets they typically peak out when the FI ownership in the market goes above 20%. And that happened in 2021. I think we are not even close to 20%. So there is still a lot of headroom left for markets to go higher. So in the near term, the technicals are not looking scarily overbought. And in terms of the positioning, I think the positioning still has some more headroom left. So a new all-time high is coming. In the month of May or June, I don't know. But in summer of 2023, yes, sir.
Okay, so that is one thing that Nikunj seems to be very clear about. But we were talking about the FIIs, and it's just pretty interesting to map out, as Aisha alluded to, yes, 8 straight sessions. And if we're looking at the kind of FII data that we've witnessed over the last few months as well, yes, it is in the month of April that you did see a buying for FIIs, month of March as well. But otherwise, on a year-to-date basis, you have the FIIs that have sold close to about 37,000 odd crores. So definitely some FOMO moment for the FIIs, Nikunj, as you were alluding to. But if we were to just look at some of the other factors as well, as the Sensex is nearing that 62K mark, apart from FIIs, the fact that you've got Brent crude prices that have been fairly supportive, there's been a recovery in banking stocks as well, and the macro outlook for us is improving.
So everything is moving as per the script. What is a favorable environment for India? Commodity prices have to remain benign. Interest rates, at least in the short term, they've turned, RBI is very clear that inflation has peaked out. B, liquidity has to reverse from global markets back to emerging markets. That is happening. And then you should be on a cusp of a new cycle. And I think that is evident if you really look at the way how the banks, autos, and some of the consumer companies have moved. So this is a good environment, both in terms of macro, in terms of positioning, and also in terms of where the participation is likely to move. I always say that in markets, don't focus on where the puck has moved, but focus on where the puck will move. And I think the puck for Indian markets has moved this year in our favor. So I go back to that same point once again. I think, yes, optically you may look back and say, okay, 1500 points, yes, it's a big gain for the Nifty. But where is the participation? Where is the excitement? Where is the euphoria? There is a lot of disbelief, a lot of FOMO, and everybody in a sense is just looking at the Nifty and individual stocks rather than participating in it. We'll talk about individual stocks where there is a bit of froth which has started, but in general, the shape of the market and the texture of the market certainly does not remind me of any euphoria or any overbought conditions. I'm sticking my neck out and saying it that in summer of 2023, we'll make a new high. Whether it is May or June, I don't know, but it will happen.
Okay. Summer it is that we are awaiting. But, earnings as well have been supportive, and you've got to give credit where it's due. Because if you just look at how the Q4 earnings roundup has been so far, and the profits have managed to jump almost about 10% on a year-on-year basis for India Inc., led, of course, by financials. If you look at the Nifty FY23 EPS, that's largely stable. So far in the earnings season, of course, this is the fag end of the large, big numbers this week, that is. There have been no meaningful downgrades or upgrades coming in so far. So it's been pretty steady a ship in that sense. If you look at technology, that of course was an eyesore, but largely you'd have to say it was a mixed bag for technology as well. It's tier 2 companies which are performed as opposed to the benchmarks. We've already seen that the disappointment coming in from especially Infosys. When it comes to banks, it's been a very, very steady performance. They've seen further expansion in margins in Q4. Automobiles mixed but encouraging when it comes to the fourth quarter, except of course Maruti, which was an outlier. Consumption, green shoots in rural demand, although Dabur was an outlier, but then again that was a standalone case. Oil and gas, Reliance again has outperformed. It's managed stellar O2C business, reportage when it came to its Q4 numbers. So that again is a good thing, right? Because there's been no alarming bad news. Technology, yes, but that's something you already knew about.
Technology stocks are down on an average 25 to 40% from the 52-week high. So technology is no longer this go-to space. And if you frankly look at most of the funds are either market weight or overweight. In general, I guess the surprise has come from the fact that most of the companies which had felt the heat or the pinch or the impact of high commodity prices and low demand, they're reversing their outlook. You see, you'll always have company-specific issues, like Aisha rightly pointed out, let's say in case of Dabur. But Marico, completely different kettle of fish. Nestle, optimistic. Britannia, super numbers. Tata Consumer, decent. So you'll always have pockets where markets will feel the heat. So for example, consumer durable, it's not been a great quarter for consumer durable, but consumer durable will always come up with a lag effect. When there is high inflation, the first impact will always be felt by consumer discretionary and consumer staple. Then it will go to consumer for white goods and consumer discretionary. But when the reversal starts, first comeback will always be done by consumer staples, soaps, shampoo, and then when you start getting more savings back into the system, you will start spending more. Yeah. So I think we are 3-6 months away from the real recovery in consumer durables. Hopefully the Diwali numbers and the Dussehra numbers would be very different. So it's a good time to buy some of those stocks now.
Okay, that's the view coming in on